Welcome to the Realizations Podcast. I'm Andrea Gordon, your host, and I'm excited to explore the world of real estate with you. In a world where perceptions often overshadow reality, Realizations seeks to redefine what it means to be a realtor. Join me as we peel back the layers of the industry, uncovering inspiring stories and celebrating the good in real estate. Whether you're a homeowner, a fellow realtor, or simply curious, this podcast is for you. Welcome to Realizations, where perceptions meet reality. Let's dive right in. Welcome to Realizations, Brady Thomas, my very favorite mortgage broker. I really appreciate you coming on to the show today. You and I have known each other for a very long time. How long has it been at this point?
So I got into the business in 2010.
It's been that long.
Yeah.
And I knew your mom, I think.
Exactly. So I worked with my mom. She was a mortgage lender for 30 years. And I started with her in 2010 thinking I was going to do this for a year or two and then go back to grad school. And then, of course, just like a lot of people in real estate and mortgage, we kind of get sucked in. And I found that it fit my skill set. And then I just have been here ever since.
Yep, it's amazing that way. You scratch a realtor or a mortgage broker or an appraiser, and you find somebody who has a very interesting life that brought them somehow through some strange ether to this world. So one of the reasons I respect, admire, and love your work so much is because you are really phenomenal at expressing what is going on in the economy, why mortgages are the way that they are, because for the layperson, a mortgage is a very weird thing. It doesn't make any sense whatsoever. The fact that it follows the bond market, all of these sorts of things. I've learned a lot of that just from listening to you, to be honest. And what I would love for you to do is to tell me a little bit about why mortgage interests you.
Well, I came into this business I didn't come into this initially because I was passionate about the bond market and mortgages. In fact, I used to sell commercial real estate for several years, and I really hated that job. I sold industrial properties in Hayward, San Leandro, Union City. Very much spent my whole day cold calling. When I would finally get a deal done, I would come back into the office and, thinking somebody was going to be happy for me, and nobody was. And they'd say, get back out there and cold call. And so in 2010, when I transitioned into the mortgage business after spending a couple of years traveling and living abroad, what I really liked about this job was that there were actual families and single mothers and grandparents who needed to downsize, people who were actually appreciative of the work that we were doing. So the first thing was just the fact that we are kind of problem solvers and able to help individuals, realize the dream of homeownership or figure out how to get out of a really pesky situation. And then I came to appreciate the actual math behind it. And again, the problem solving and an explanation, right? It's really confusing for somebody. I always tell my clients, nobody's born with this knowledge. Now, when we're done, you will feel capable of explaining what the heck you just went through to friends and family. But there's such an imbalance at the beginning. And I mentioned before I was living abroad for 2 years, I was teaching English in Central America. And so I've brought that education-based selling into what I do here because that's what I enjoy. So
Are you bilingual then?
Yeah. So after I left the commercial real estate space, I was determined to learn Spanish because foolishly, I took French all the way through high school and college. Yeah. Which was great. I really enjoyed the culture, but I wanted to learn Spanish. And so I went and immersed myself I lived in Nicaragua and Costa Rica, traveled in Colombia, Panama. So I can't claim to be fully bilingual, but I can absolutely get by. And when I was living in Costa Rica, I had a Colombian girlfriend who spoke no English. And so after cursed out by her in Spanish a few times, I figured I needed to learn this language. So I'm pretty solid right now. Yeah.
I can swear in about 6 or 7 languages.
There you go.
That's about it. I forgot. I learned French, and then I got married to someone from Spain. So my French and my Spanish got totally horribly intermingled. And now I can go to Italian films and sort of understand it. But in any case, what I would say is, what do you think makes you different as a mortgage broker in relationship to other mortgage brokers?
Yeah, it's interesting. I think about this a lot. I had a mentor actually when I was in my previous career doing commercial real estate, and he told me, what makes you different from the salesperson down the hall? And that's what you need to be able to explain to any client in 30 to 60 seconds. So I think my competitive advantage is my singleness of purpose. I am constantly thinking about how I can help you or those like you, the real estate agent, be successful in your business. And so I've tailored my whole business around solving problems for my real estate partners, my real estate agent partners. And by virtue of that, there's so much that goes into it, right? So I have to have a thorough pre-approval process that moves my clients from confused to confident. I have to be at the point of making offers to help my buyers get their offer accepted and make sure that the listing agent understands we're going to perform, and we demystify any concerns they have. We have to provide clear communication. We have to be willing to teach and engage. But I wake up every day thinking about how I can help my real estate partners, and sometimes to the detriment of other parts of my business. When everybody was focusing on refinances in 2020, 21, and 22 when rates were low, we were still solely focused on our real estate partners and helping people buy homes. And so if you look at my numbers, I didn't do nearly as many refinances as some of my counterparts because I didn't want to lose focus. Now we have a way to do refis. We can do them. We have a process, but my focus is clearly and solely on the real estate agent. And that's something I can communicate to an agent when I sit down with them. It's something also that they then share with their buyers, which is, he's focused on helping us win in a competitive market.
Truly. And I love you do this thing called 3 things in 3 minutes, and you do it every single week. And it is so helpful, Brady. I love the fact that you are thinking about how to market things and you're thinking about what can help a realtor to move forward with their clients in certain situations. And you're also extremely educative around what's going on in the economy and how it affects mortgage rates and therefore how it affects your people. I love this. And that's one of the things I truly appreciate about you. Anybody listening, if you ever get a chance to listen to him do his 3 things in 3 minutes, it's worth it. It's pithy and right on every single week. So, what are the most common problems that families face when they are attempting to get a mortgage right now?
Well, right now, more
There's
so than at any point in the last 10 or 15 years, it's just we have an affordability crisis, right? So
right.
everything is just so incredibly expensive. And that makes it difficult to really wrap your head around the full benefits of homeownership. So I'm constantly trying to do two things. One, educate my buyers on why they're actually doing this. I think we all understand the American dream of owning your home, and we can buy into some of the benefits of that. But it's also really imperative to drill down on some of the other things that might not be as obvious: the appreciation of the home, the tax savings, the joy of ownership. It's a very simple to understand investment type. So one, it's going back to these clients and making sure they really understand why they're doing this. Because when, for lack of a better analogy, when the bullets start flying and you've made an offer and the seller comes back and counters you at a higher price and you're competing against other people, I don't want them to then start worrying about, oh my gosh, this feels too much. Why are we doing this? And they freeze up. So when things get
Right.
really hectic, I want them to I want them to have a clear understanding and be motivated to complete this part of the purchase. Or if we need to educate them that now's the right time, that's fine too. I always say that we don't say no. We
hmm
always say how and when, right? So it
hmm
might not be the right time for everybody to purchase at every moment. And if it's not, let's come up with a plan and get you ready. So that's the first thing. The second thing is just talking to them about ways that they can affect their own affordability. So
hmm
I will walk them through the difference between qualification and affordability. Qualification is what the bank will lend to you based on your credit and your income and your assets.
hmm
It's just their own rules. And we can talk about how high that means you could conceivably go if we were to stretch to your max. Affordability is about what any individual or any family is comfortable taking on as far as a monthly payment,
Right.
taxes, insurance, total out of pocket. And so there are things we can do even in a high rate environment to help with affordability, including getting seller concessions, using different loan programs. Really common one is the temporary buy down, where you can get the seller to pay for an artificially lower rate over the first few years. So
Hmm.
It's really just trying to make sure that one, they understand why they're doing it, and two, they understand the tools at their disposal to try to improve their situation, at least until rates come down and they can capture a lower rate and therefore improve their affordability.
Got it.
Yeah.
Yeah, I mean, this year's been super tough. What I have noticed out there, because as you know, I'm primarily a listing agent, I've noticed that there are fewer real buyers out there.
Yeah.
I'm getting a lot of neighbors at every open house, but I'm getting few genuine buyers. And the buyers that are out there are ambivalent. And I believe it's because of these interest rates. And I believe that it's also because of all the weird commission stuff in the news. It's the election. I think that there's a lot of uncertainty around, especially in the Bay Area where we're pretty liberal. You know, people are worried about what's about to happen, whether
Yeah.
we're going to become an autocratic dictatorship or not.
Yeah,
So,
100%. I'm seeing that too. I for
something
the
like
first
that.
time in my career,
Hmm.
I've had multiple clients get in contract and walk away. And some of
Yeah.
them late in the process to where they were walking away from their own deposit. They're walking away from real money because they
Hmm.
panicked and that's been an impetus for me to go deeper and go and provide more education on the front end because I never had that happen before. It wasn't even anything that
Right.
would cross my mind because everybody was in a multiple bid situation. They won the house. They were super exciting and they're super excited. They know they beat out 10 other offers and they're ready to go. Well, now there's less of that. And so people don't necessarily like that. They're the only, they think that they're the stupid ones who are buying a home when everyone else isn't. And then that leads to some buyer's remorse that
Right.
can.
Right. And we've had a lot of trouble recently as well in Oakland because of all the incredibly bad press around crime. And, crime is everywhere. There's no way to avoid it at this point
Yeah.
in time. But it's just really sad that a beautiful city like Oakland is being tainted by other people's rhetoric. And it's not reality, actually. There is crime, but there's actually not that much more crime. As a matter of fact, there's less violent crime in Oakland than there was 10 years ago, even if you look at the stats.
Yeah.
So when you're talking to people, when they talk to you about different cities that they might
Yeah.
want to live in, how do you deal with that?
So first off, was born and raised in Oakland. I went to Oakland Public Schools. I went to Bishop O'Dowd High School, which is a Catholic school here in Oakland. I love Oakland. I have 4 properties that I own in Oakland, a few rentals in the home that we live in. And so I believe in this city. But I do understand that it's a perception issue. Our city government has always been less than stellar, but right now there's just it does not feel like there's any leadership.
Correct.
It doesn't feel like, I mean, I have a really good friend who I grew up with in Oakland who I'm helping buy a property in Berkeley. And I asked the question, why are you moving to Berkeley? It's just the same there. And his response is, well, at least in Berkeley, when I call the police, somebody will show up. And that kind of
Hmm.
perception that there's nobody there to help is, I think, driving a lot of this. I get to be a little bit more dispassionate than you all
Hmm.
because I'm the numbers guy, right? And so
Right.
I, of course, try to build rapport with my clients by asking, where are you looking? What are you looking for? If they bring me a home, what is it about this home that you really loved? And hearing from them because, I like that part about my job, learning about my clients and what their goals are. But I also don't necessarily have to get into the subjective as much.
Hmm.
So when I do hear people, when we kind of get some of this coded language where, oh, we're buying here for safety or schools or whatever, like I don't really dive into that too much
Hmm.
because I
Hmm.
feel like my job is just to be an advisor on the
Hmm.
numbers and on the strategy. And I let you guys, field those calls late at night. So yes, I get to be kind of the dispassionate numbers guy who doesn't necessarily have to focus as much on the subjective. I lean into that and it plays both ways. So some of it is me being able to gracefully bow out of having an opinion because I don't want to say something that the agent might not want me to have shared or to have given my views on, which is fair because you guys
Hmm.
have a totally different
Hmm.
role and more than I about the home and the neighborhoods and the
Hmm.
negotiation. The other part of that is I also a little bit get to hide behind just the fact that this is purely a math equation for the lenders. And so when people come to me and say, why are you asking me for this? Or why do you want that? Or I shouldn't have to provide you this. My response can be, well, if you can get somebody else to lend you $1.2 million without asking for this documentation, then by all means, you should go with them. But if you want to get this money from this particular
Yeah.
investor or this lender that we're using. This is what we need. And I get to hide behind a little bit of our rules and not have to necessarily engage with some of the subjective stuff that is difficult to walk the tightrope on, especially right now when people are so uncertain.
Right. It's interesting thing. Part of the goal in doing this podcast is that I want to really make people understand the level of complexity that's involved in a real estate transaction and all of the people that are involved in putting something together for that buyer or that seller. Like just in the few minutes we've been talking, I think people will understand that there's a very complex interreaction between the buyer, you, the seller, that has to get handheld all the way to the end of the process. And it's not just numbers, it's also emotions, it's also dreams, desires, expectations, worries, people's own sense of unworthiness. All kinds of stuff comes up in
Right.
a real estate transaction that we have to figure out a way to successfully navigate around.
Right.
And it's only with practitioners like yourself that we end up in a situation where I do believe the clients are given, they're listened to and they're heard and they're helped. And that's the thing in what we do. We are constantly helping people on a
Right.
lot of levels. How has the mortgage industry changed since you first started doing this? Which is, of course, a very trick question.
Yeah, so I think there's been two major changes. One happened in 2014, and that was our rules as mortgage loan originators changed about how we are paid. And that required us to provide some more clarity to our clients about the way that we are compensated. So 99.9% of the time, the buyer does not pay my commission. It's built into the cost of doing business for the bank. But my commission has to be exactly the same with every single deal. And so it meant I couldn't necessarily give a better deal to a buddy and charge somebody else who maybe wasn't more inclined or was less inclined to shop around a higher rate. So that was actually a good change for the consumer, but it required a big change for us. And so I was so new in the industry that it almost wasn't even a hurdle for me. I just said, okay, this is what's happening and I'm going to make that change. And so I've always, as part of my value proposition and as part of my scripted process that I give to every single buyer, I've explained how I get paid, how it fits with industry standard so that they understand it. And so that was one change that happened in the beginning. The biggest change that I've seen since I started is just happened in the last year and a half or 2 years. And we've moved from a speed-based business to a skill-based business. And that goes back to what we were talking about before.
Mm-hmm.
When rates were low and everybody understood the value of homeownership, wanted a loan at 2.5% and needed a bigger house because COVID was running rampant. It was all about how quickly can Brady call me back? How quickly can we get pre-approved? How quickly can you close? We're ready to go now, now, now. Now, currently, we are in a market where people are scared. They need to have things explained to them. They need to have somebody working with them who is a skilled negotiator like you, who can help them craft the best deal for the right home at the right time, at the right price. And they need a lender who can be creative and help them solve problems so that they can win at the number that they need to with the payment that they need to. And so being able to understand all the different loan programs, products, different techniques for getting seller concessions, how we might close quickly, that type of, which I really like, because remember, I said I came into this and I really enjoyed the problem solving aspect of it, that
Mm-hmm.
two deals are the same. And I feel like that's much more in demand right now. And buyers feel that. They want it. They want to understand that you have a process and a program, and it gives them some assurance. And so for the last 2 years, I've focused a ton of my time completely revamping my offerings to my clients so that they get a different type of service that helps them, again, move from confused to confident as we move through the process.
Great. That's wonderful. Now, what role does the credit score really play in the mortgage process, do you think?
Oh, you're trying to get me fired up now. So there's three things that matter when determining someone's ability to buy a mortgage or to buy a home. And the first is credit, flat out.
Mm-hmm.
So when we look at credit, we're really looking at two things. One is your credit score as an indication of your past repayment history. So if you've paid back everybody on time and in full, then you're going to have great credit. And typically great credit is anything over 720. If you've had late payments, derogatories, past dues, collections, you will have a lower credit score because, again, you haven't demonstrated an ability to pay back on time and in full. And if you start to have a credit score in the mid to low 600s, it can be more difficult or impossible to qualify for certain types of mortgages. So that's hugely important. The second thing we look at when we're talking about credit is your ongoing monthly obligations, car loans, student
Mm-hmm.
loans, credit card payments, because we just want to know what else you have going out to
Mm-hmm.
decide how much more you can take on as far as a monthly obligation. So credit to me is number one. I mean, sometimes we sit down with people, we pull their credit, and we know we have some work to do and it's going to take time before we even talk about the other two things, which are income, right? How much you make, and your assets, how much you have available for the down payment, checking, saving, stocks. So credit's huge, but there are some really simple ways that you can create a credit score and a credit profile for yourself, what the banks are looking for. It's kind of easy to hack. It's hard if you fall behind or if you have bad spending habits, but if you understand what they're looking at, it's really simple to have a really fabulous credit score.
Mm-hmm. Mm-hmm. And what are those things?
Yeah. So my pieces of advice are, one, you need to have credit. So having zero credit, having no credit is worse than having bad credit, if you can
Yeah,
believe that.
I do.
If you have no credit score, we have nothing to go on. It's like you
Right.
don't exist, right?
Right.
So the first thing you can do is open two trade lines. That's typically credit cards or maybe a car loan or a student loan if you have those, but two trade lines. I would suggest revolving, so credit cards. Make one charge on them per month or more if you need to, but pay it down to zero every single month. Do not carry balance at 20 and 25% interest. It's financially irresponsible, but also you don't need to. If you have a charge, so it's active and you pay it down to zero every month with auto pay, that's the best approach. The second thing is no late payments, flat
Mm-hmm.
out. It will screw you so hard if you have late payments. I just did a post on my Instagram recently about a client who had stellar credit her whole entire adult life. And she had one $25 late payment on a credit card and it dropped
Oh
her
my
score
God.
780 or 790 down below 700. And it will cost her thousands of dollars a month in interest because we were already in the process of purchasing. And so it's not fair. They don't really do a good job of determining, is this really a major derogatory or is it just 1 month of an oversight or a bill that went to the wrong address? So the next big thing is to pay on time. Everything. Set up auto pay. Just you cannot have a late payment. And then the last piece of your credit is just making sure you're checking it too. And so periodically, just doing a free pull to get a sense of what your credit scores look like, correcting any information that's inaccurate or making sure that you have some credit monitoring. So just doing some of the work yourselves to make sure that you're not in a position where something comes up later that you weren't aware of. But it's that simple. I mean, you don't need a credit repair company to tell you this. You need to pay on time and you need to keep your credit card balances low but active.
Very good. Very, very good. So just in conclusion, what do you see moving forward in the mortgage industry?
I have to admit that I would have been wrong with some of my prognostications from last year
Yeah,
because I, like pretty much everybody else in the industry, thought that rates would have come down by
yeah.
now. Rates are artificially high because of inflation. Inflation is the worst thing that can happen to an economy, or one of the worst things.
Mm-hmm.
So the Fed had to move quickly to fight inflation by raising interest rates. Now we can have an argument or a discussion about how we got runaway inflation, if that was the Fed's fault also, but they had to increase rates.
You know how I feel about that.
So my thinking was, one, that would work faster. And two, our economy is addicted to low rates. I mean,
Yeah.
we don't see as much investment with these venture capital funds, and these tech companies don't invest in employment and R&D as much without having cheap money.
Mm-hmm.
Well, our economy's been much more resilient than was expected.
Mm-hmm.
And so inflation has remained pesky, employment has remained relatively strong. And we
Mm-hmm.
still see people spending money. So I'm telling people to watch out for those three things: inflation numbers,
Mm-hmm.
jobs numbers, and spending numbers. If we start to see each of those move lower, then we will be in a situation where the Fed is going to ease up off what they've done with raising rates, and we'll see an improvement in rates. Once rates come down, that what you talked about with not there being not as many buyers or not as many motivated parties, that's going to change because there's going to be a lot. I mean, I see it right now. There's tons of pent up demand from people that got pre-approved. They got
Right.
sticker shock from rates that are in the 6s and 7s, and they're just waiting for rates to come back down into the 5s or hopefully 4%. And we're going to see a lot of people flood back in. So I'm telling my buyers, if you really believe in homeownership, now is the time to get in. Well, because you can
Mhm.
always refinance the rate. You can't refinance the
Exactly.
price. You know, if you
Mhm.
pay for a home or if you have to get into a bidding war, that's the price. I mean, I experienced that on my house. I bought in our current home, I bought in 2021, and my
Mhm.
house is probably down 200K from what I paid for it. I have a low rate, but my payment is my payment and my price is my price. So I'm not going anywhere. I'm not going to realize that loss. I love this home and we're going to keep it forever. But, for some people, being able to get in at a good price is really going to be a huge win when rates come down and then you can capture a lower rate. So that's what I'm projecting is when do rates come down? Because I think that will be a big cure-all for our marketplace and for the housing market and deal velocity. You also see more sellers be willing to sell and move because they can
Exactly.
capture a lower rate. So these
Yeah.
high rates are just have a lock-in effect. And once that changes, I assume we'll see a lot more deals done, a lot more people moving, and the housing market feel more normal and hopefully more affordable.
Well, that is just wonderful. And I hope you are right. Fingers big time
Yeah.
crossed. Thank you so much for being my guest today. I totally appreciate you coming on my podcast. Brady Thomas, LaSalle Financial, everyone. Where can people find you if they are looking for you, Brady?
Yeah. So I am at Pep Talk Mortgage, PEPTALK, and then the word mortgage spelled out. So Pep Talk Mortgage on Instagram and TikTok. So I do a lot of posting there about what's going on in the marketplace. And then also LaSalleMortgage.com is our website. And then I'm at bthomas at LaSalleMortgage.com. Any of those places, I'm out there. I'm trying to be in the market and explain what's going on and help people understand the benefits of homeownership and if it's right for them.
Awesome. You are wonderful. Have a beautiful rest of your day. And I just love you. Take good care. Thank you for joining me on this episode of the Realizations Podcast. I hope our conversation has shed light on the true essence of real estate and the people behind it. As we wrap up, I want to extend my gratitude to our listeners for their support and engagement. Your feedback drives the heart of this podcast, and I look forward to continuing this journey with you. If you enjoyed today's episode, please consider subscribing to the Realizations Podcast and leaving a review. Your support helps us reach more listeners and spread our message of positivity in the real estate industry. Until next time, remember to keep an open mind, embrace empathy, and always seek the good in every situation. I'm Andrea Gordon signing off from Realizations. See you next time.